Hello, and welcome to the day 4 of the Definiti Retirement Academy. I'm really glad that you're here today. I'm looking forward to sharing some really great content. We've got some great speakers lined up, and I think that you'll learn a lot. If you've been able to join us on the previous days, I just wanted to give you a quick recap of some of the things that we've talked about. We've talked about a lot of basic 401k content. So if you're new to plan administration, we'd encourage you to go back and look at day 1, day 2, day 3 of any of those sessions that you may have missed. And also keep those in mind whenever you have new people join your team. It will help them understand some of their responsibilities for your plan. Today, we have quite a good number of sessions scheduled. And of course, we couldn't do anything, frankly, without the help of our sponsors. So I just wanted to say thank you to our sponsors. And we have a few. Obviously, they're really great partners for us, and we enjoy having them as partners and really appreciate their partnership. So a special thanks to John Hancock, Capital Group, Securian Financial, Principal, Voya, Penchecks, Empower, Transamerica, Lincoln Financial, T. Rowe Price, The Standard, and Vanguard. Again, really, we couldn't do this without them. So we're going to start our next few sessions for today, and I just kind of wanted to give you a few quick pointers. We will be taking questions at the end of the session. If you do have questions during a session, go ahead and use the chat function and send those to me, and I'll be watching so that I can prompt our speakers at the end and ask your questions. And then also, all of these sessions are being recorded, and we will post them on our website next week. You will get an email. Anyone who's registered will get an email that says this is where you can go to get access to the videos. So watch for that email. And then you'll be able to see not only all of the sessions for the plan sponsor track, but also the advisor track. And by the way, they're all next door learning about the Washington update, right? There's a lot of legislative and regulatory updates that are happening. And so they're hearing about that today. So if you're interested in that as well, that'll be another session you might want to look into when the recordings are posted. So for today, I wanted to introduce our next speaker. This session will be a year in the life of your plan, kind of talking about the calendar and what's required during the life of your plan in a calendar year. And that will be Bill Pratt. Bill, the floor is yours.
Great, thank you. Thank you very much. My name is Bill Pratt. I'm a senior retirement plan consultant here at Definiti, and I'm here to talk about the annual cycle for your retirement plan. Everything we do throughout the year starts with getting good census data. This is the basis for all of the non-discrimination testing that we do, and also the annual Form 5500 filing. These are all of the data elements that are needed on the employee census. We need a social security number, a full legal name, dates of birth, hire and termination, if applicable, a date of rehire, a compensation. Sometimes we need pre-entry compensation, total hours of service, 401k pre-tax and Roth deferrals, and any employer matching contributions deposited during the year. The compensation you provide would be the compensation as defined in your plan document. If you're not sure what that is, you may ask your plan consultant to assist. We may also need additional compensation elements, such as compensation earned prior to a participant's plan entry date, and also excluded compensation if that's applicable. Often plan sponsors choose to exclude things like overtime pay, bonuses, and commissions, and we will need to ask for those dollar amounts because we will need to do some additional non-discrimination testing to prove that the compensation definition used by the plan for employer contribution allocations does not discriminate in favor of highly compensated employees. We will also need complete deferrals as reported on the W-2s for the plan year. If the plan has Roth contributions as well as pre-tax, we will need those amounts separated from one another in different columns. If your plan excludes classes of employees from participation, then we will need to ask for the excluded employees to be identified. If there are union employees, we always need to know who those people are, but there may also be other types of exclusions, such as leased employees or interns, that we would need to have identified as well. In addition to the census data, we also utilize an annual questionnaire to collect additional information needed. It is important that we receive information about the officers and owners during the year, including ownership percentages, officers and their titles, and any employees related to those individuals along with their relationship. Because of control group rules, we will also need to know about any other companies owned by the owners and relatives of the plan sponsor, particularly if they are not participating employers in the plan. We may also ask for W-2s and the W-3 or W-2 totals page to double check the census compensation. Finally, if the plan sponsor is a partnership, LLC, or a sole proprietor, we will ask for draft Schedule K-1s or a Schedule C. This is because there are additional calculations needed to come to the correct eligible compensation for the owners and thus allocate their contributions correctly. These are some of the deadlines for the first quarter of the year. As you can see, many are related to the 1099-R and 945 reporting. If your plan is on a record-keeping platform, the platform will handle the 1099 reporting. If your plan utilizes brokerage accounts, Definiti contracts with pen checks to handle the 1099 reporting for you. For non-safe harbor plans that need to perform ADP and ACP non-discrimination testing, any necessary refunds to highly compensated employees generally need to be done by March 15th to avoid excise taxes on the refund amount to the plan sponsor. If your plan is an off-calendar year plan, the applicable deadline is 2.5 months after the end of the plan year. For participants who have reached age 72 and need to take their first required minimum distribution during 2022, there's an additional grace period of 3 months to get the first RMD done, so the applicable deadline will be April 1st of 2023. So we have one deadline in the second quarter. April 15th is the deadline to refund any excess salary deferrals over the annual limit, which for 2022 is $20,500 or $27,000 for those who are over age 50. Payroll systems generally do a good job of monitoring the limits, and most record-keeping platforms will also monitor and send an alert when people are getting close to or exceeding the limits. Third quarter deadlines, we have July 31st, which is the date by which the Form 5500 must be filed for a calendar year plan. Definiti automatically files extensions for plans who have not filed their 5500 by late June or early July. No signature is required on the extension. We just print it out and send it to the IRS. September 15th is the funding deadline for employer contributions. If you file your income tax return before September 15th, then your deadline to fund employer contributions is the date you ultimately file your income tax return. All employer contributions must generally be in the plan by the time the corporate return is filed. The summary annual report must be distributed by 2 months after the 5500 filing deadline, so it needs to be out by September 30th or by December 15th if the 5500 has been extended to October 15th. Now I'm going to shift gears and talk a little bit about Form 5500. The 5500 must be filed electronically via a system called eFast2, which is run by the Department of Labor. Once we prepare your Form 5500, we will send you an invitation to sign the form and submit it electronically. In order to do that, you will need to sign up for your eFast filing credentials if you have not done so already. If you utilize Definiti's 316 trustee services, we will sign the Form 5500 on your behalf, so there's no need to follow these steps. But if you need to, you would visit the link on this page and click register. Be sure to read and sign the privacy statement. Complete your profile and be certain to select filing signer as your user type. Select a challenge question and enter the answer. This will be used later to retrieve your user ID and PIN if you forget what it is. Confirm your profile information and click on Submit to continue. If you have provided valid profile information, you will be taken to a register confirmation screen where you will be instructed to check your email to complete the registration process. To confirm your account, follow the link in the confirmation email and answer the challenge question you created earlier. Sign the PIN agreement and accept the signature agreement. Keep your assigned user ID and PIN with your records. I've also found that it's necessary oftentimes to log in just one time after you receive your credentials to activate them. For whatever reason, sometimes it won't work until you take that extra step. Qualified retirement plans must purchase a fidelity bond. Check with your business insurance agent about issuing a bond for your plan. The bond must cover all persons who handle plan assets, contributions, or funds. The amount of the bond must be equal to at least 10% of the value of the plan assets, not to exceed $500,000. Plans that invest 5% or more of their assets in non-qualifying assets, such as limited partnerships, coins, diamonds, or works of art, etc., must carry a fidelity bond in an amount equal to 100% of the value of the plan's assets or be subject to a plan audit. I want to mention here that it's a good idea to add an inflation guard rider to automatically increase the bond amount to 10% of the assets so that you don't have to monitor it quite as closely. If you need a recommendation of a company to purchase your bond from, you may ask your retirement plan consultant. A one-participant plan, or a plan that covers only the sole owner of a sponsoring business and his or her spouse, or partners in the sponsoring partnership and their spouses, is not subject to ERISA. Therefore, a one-participant plan does not require a bond. A one-participant plan immediately becomes subject to ERISA if anyone else meets the plan's eligibility requirements. The plan would then be subject to ERISA, and you'll need to purchase a fidelity bond. Now, a quick word about plans needing an audit. The threshold to be considered a large plan filer and therefore trigger the need for an audit is 100 participants. If you were a small plan filer for the prior year, you have a bit of a cushion. Once you have over 120 participants as of the beginning of the year, you will need to engage an auditor. Once you are a large plan filer, you must get back under 100 participants as of the beginning of the year in order to be allowed to file as a small plan again. Once an audit has been completed, we will then attach the financial report completed by the auditor to your Form 5500, and it will be ready for signature and electronic filing. We've already mentioned some of the deadlines on this slide, but this is a good summary of the most important deadlines that are part of the annual cycle. So just to recap, April 15th is the deadline to correct 2022 excess salary deferrals that exceed the calendar year limit. July 31st is the filing deadline without extension for the Form 5500 and the Form 8955 SSA. September 15th is the contribution funding deadline for matching and other employer contributions if your corporate return is on extension. September 30th is the deadline to distribute your summary annual report unless the Form 5500 is extended, in which case the applicable deadline would be December 15th. And finally, October 15th is the final deadline to file your Form 5500 and Form 8955 on extension for a calendar year plan. If you have a safe harbor plan, you must distribute the safe harbor notice to participants by the beginning of December. Definiti will prepare the notice and send it to you with plenty of lead time to meet that deadline. December 31st is generally the date by which required minimum distributions must be done, unless the participant has just turned age 72 and is taking their first one, in which case the deadline would be April 15th of the following year, or April 1st of the following year, pardon me. This is another one-sheet reference of important dates for you to keep for your records. ADP non-discrimination testing refund deadline for a calendar year plan is March 15th. Corrections are due 2.5 months after the end of the plan year for off-calendar year plans. Employee deferral and employer matching contributions must pass specific ratio percentage tests, or refund money may be issued to some highly compensated employees. Filing deadline for your Form 5500 for a calendar year plan, July 31st or October 15th on extension. General rule is that the Form 5500 is due 7 months after the last day of the plan year. 2.5 month extension may be granted by filing the Form 5558, which again, Definiti will do on your behalf. The summary annual report has to be distributed to participants by within 9 months after the end of the plan year. So for a calendar year plan, that would be September 30th, or if on extension, December 15th. Here's a guide to when required notices are due. Fee disclosures are generally prepared by the record keeper and may be found on their respective websites. Automatic enrollment notices, if applicable, will be prepared by Definiti along with your safe harbor notices and distributed to you in plenty of time to get them out to your participants by December. Here's a reference guide to document retention requirements. You should indefinitely keep all originals of your plan document from the inception date of your plan, including any amendments, summaries of material modifications, summary plan descriptions, IRS approval letters, beneficiary designation forms, payroll records, employee census data, and any loan and distribution records. 5500s, bond information, and corporate tax returns should be kept for at least 6 years in the event of an IRS or a Department of Labor audit.
Unmute. Yes, thank you so much, Bill. Yeah, that's you can see there were a lot of reasons why we wanted to make sure we went over the calendar of dates that are needed, dates that you need to think of throughout the year. Now, keep in mind, your retirement plan consultant is right there. We will do our best to make sure we remind you of those important dates. But we did want to let you know that there are some resources available for you. So if you have additional questions, obviously this session replay, which will be posted next week, and you can use that as a guide. You can go back. Bill did a great job going through it. And then we also have both as a downloadable PDF and also as a web page on the website, calendar updates. So it's a link, it's a page with all of the required updates, and it's broken up according to the quarterly update, just as Bill did. So both of those resources are available for you. And obviously, your retirement plan consultant is the best person to go to. They're familiar with your plan. Now, Bill, I did have a couple of questions that came in. Are you game?
Yeah, absolutely.
The first question is about the 5500. Doesn't Definiti file the 5500 for us?
We sometimes do, even if it's not a 316 services plan. I know that I oftentimes will send out a filing authorization to the plan sponsor and have them sign it, which gives us the ability to go ahead and file on their behalf. So yes, we sometimes do that.
Will they always need to sign a 5500?
They always need to sign the first page of the 5500 with a wet signature and then keep that page for their records. Yeah. And then we need also to have a copy for ourselves to attach to the Form 5500 if we're filing it on their behalf.
Mm-hmm. And you mentioned earlier that if they are engaged with the fiduciary studio for 316 services, they will file it on their behalf as well. Is that right?
Yes, correct.
Yes. Great. Good. Here's a question about plan years versus calendar years. Are all of the due dates would be different if the plan is on a calendar year, correct? So you went through the calendar year, calendar plan year due dates. How would those adjust if they were not on a calendar year plan?
We do have a slide in there that shows the applicable deadlines for after a calendar or a non-calendar year plan, I should say. But as a general rule of thumb, it would be for ADP refunds, the due date would be 2.5 months after the end of the plan year. So for a calendar year plan, it's March 15th. The deadline to correct calendar year deferral excesses is always April 15th, regardless, because that always follows a calendar year. Form 5500 always due 7 months after the close of the plan year. Unless on extension, in which case you're granted an extra 2.5 months. Okay,
and then this is exactly where your retirement plan consultant is the best person to go to when you have a question, right?
Exactly.
So if you always, anytime you have a question about when something is due, please connect with your retirement plan consultant. They'll be able to help. Here's another question. If a sponsor has 120 participants at the end of a year and wants to reduce, the best way maybe to eliminate terminated participant balances?
Yeah, in fact, that should be done at least once a year anyway. We should go through and because the document, at least by default, we put it in the plan document that small balances of less than $5,000 are eligible to be forced out of the plan. But yes, if you find you're getting close, it's probably good to be extra diligent about that and get participants with small balances out of the plan prior to the close of the year so that you don't end up going over the threshold.
Yes, I agree. Where do we get the summary annual report? Is that provided by Definiti, or do we have to print it out ourselves? That's a question from a.
Yes, we provide that along with the annual valuation report that we prepare, which generally you'll receive the annual valuation report, the Form 5500, and your summary annual report all at the same time, along with an instruction letter, a cover letter to the annual valuation that explains everything that you should do and all the action items, which include distributing your summary annual report.
Yes, and on those slides, we had an icon for the new Definiti plan sponsor link, which will be where they'll find those materials. All that material will be posted there. When we are ready to roll that out to you, you will get communication ahead of time, letting you know when it's ready for you to log into plan sponsor link so that you can have access to it. Good. So I think we've gone through the resources, and it looks as though we've answered those questions. So thank you so much, Bill, for stepping in and sharing the life of a plan and a calendar year updates and things that you need to keep in mind. Thank you, Bill, for your time and attention today. Appreciate that.
Great. Thank you very much.
Great.